Hey guys, welcome back to another episode. Today we're going to take a closer look at some recent updates impacting Nvidia. We finally have a GPU in space. Yes, that is real. We're also going to take a closer look at Navitas. The stock just reported earnings and the stock is down roughly 14% after hours. What went wrong? We'll learn a little bit more. And I also want to share my overall thoughts on Coreweave and Nebius. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first let's start off with Nvidia. Nvidia actually had a lot of news today, and I covered it in my early morning video. So if you haven't watched that, make sure to watch that after this. The stock was up roughly 2% because a lot of bullish sentiment, like the OpenAI deal, like AWS buying more GPUs, Iron buying more GPUs, and the list goes on and on. Now, a few things that I didn't cover is Star Cloud, which is Nvidia AI startup. It's not owned 100% by NVIDIA, but NVIDIA does invest in these inception programs. And they just released their first GPU in space. SpaceX was the one that actually delivered the workload. And this is the first H100 in space. Now, I don't believe this is something that should drive stock price up. I just think this is a moment that everyone should know is happening, because maybe 4 or 5 years when we maybe have some form of more data center solutions in space, it was all thanks to this moment right here. So I just wanted to share it because I did think it was cool in the technology aspect. Now, something that might relate to now is Microsoft CEO mentions that 1.1 million tokens were just achieved on one rack of GB300 GPUs. And this is crazy, right? This is crazy because right now we are in the era of inference. And if your solution can provide a lot of tokens, you're going to be able to provide a lot of customers and a lot of inference solutions. So the GB300 just broke a new record, 1.1 million tokens on Llama 2, 70 billion inference, beating the previous record, which was actually by the GB200 by 27%. That is massive. One of the main reasons is that this GB300 has roughly 50% more GPU memory than the GB200. So overall, bullish, because I do believe with this inference race, NVIDIA having the NVO72 is a crazy player and crazy leader in the AI inference space. Now, I want to take a closer look at Navitas. Navitas just reported earnings. The day sucked. The stock was down 9% on the day, and after hours, the stock is down roughly 14%. Now, this is a stock that has been very exciting lately because of a partnership with NVIDIA. If you have watched my videos, you do know that I've mentioned to be careful with this one. This is one that I believe is more of a trading vehicle in the short term, but does have the opportunity in the long term. And we can see in the short term, it's definitely playing that trading and volatility vehicle, as I believed it would. Now, let's try to understand what's happening with Navitas. I created this amazing slideshow for you, but the first thing is they are doing a major shift in the business. They are pivoting away from lower margin business and just focusing on AI data centers and this 800-volt ecosystem happening in the data center space. Now, we're going to see this pivot is creating some hiccups in revenue growth, but in my opinion, it's definitely a smart move. Now, some pretty cool things. They are partnered for 800-volt AI factories. Were named by NVIDIA as a key power semiconductor power partner for its next generation 800-volt DC AI architecture. They are the only partners in the 14-member ecosystem that NVIDIA has with both gallium nitride and silicon carbide technology at scale. They also are seeing engagement pivot from shifting from US hyperscalers, NVIDIA, and other these massive players who are now driving power architecture from the grid to the GPU. And what this means is back then, when you were kind of a semiconductor AI player, you pretty much just worried about the power components within the GPU, within the CPU, within the server. Now that's not the thing. You're even worrying outside of the grid as well. which is creating a lot of demand for the various types of power solutions that Nvidia has. Now, they talked about some of the solutions that they announced, for example, that mid-voltage GaN for 100 volt, the high voltage silicon carbide solutions for solid state drivers, solid state transformers. Regardless, with these new portfolio products, they mentioned that this is a full portfolio that now covers that entire path that we were needing from the grid to the GPU. Now, if you liked the episode and want to stay informed, make sure to hit the subscribe button. I'm trying to hit 85,000 subs by the end of the year. If you want a free AI semiconductor newsletter, check out What the Chip Happened. And if you want to join a community, that is what I'm trying to make the #1 resource for investors and anybody in the AI and semiconductor space, check out What the Chip Happened. I have a community right now because it's just starting off. To help me build it, I'm offering 50% off your annual subscription. This is the best offer that's going to happen. And I already covered some great earnings. I just dropped my deep analysis on Cypher mining. So if you're curious about that one, just join. I do believe I'm going to offer much more value than you're paying for this annual price. Now, if we continue with Navitas, a few things. So 2026, they believe is going to be a transition year for them. They expect some growth, but it's mainly a transition year. The reason they expect some growth is AI powered notebooks and high end computers require more power, driving demand for a lot of the solutions that Navitas has. Then you have the traditional data center. This traditional data center is focusing into this full 800 volt pivot. And between now to then, you're also seeing some transformation into other aspects, which could benefit this company as well. And finally, energy and grid, the acceleration in demand for energy infrastructure to support the massive power needs of the AI revolution is creating a nice amount of opportunity for a lot of their solutions as well. Now, the biggest bull case is in 2027. Management calls it the prime time, and this is an inflection point. The real story for 800 volt architecture begins in that year. And management believes that revenue will reach completely different levels and trigger exponential growth happening from data centers. Now, this is what one should be investing in. But remember, the real story doesn't begin until 2027. So one has to be a patient investor if you are investing in this player. Because if we look, Q3 of last year was 21 million. This year was 10 million, over a 50% drop. Now, next quarter is expected to be even lower than this quarter, and it's expected to be a 67% year-over-year decline. The main reason I talked about earlier is you're walking away from lower margin traditional mobile revenue, consumer revenue. And again, they're really focusing in data center. And Q4 and Q1 are mainly expected to be those transition periods, and then from there on you should expect to see sequential growth, finally reaching that massive opportunity in 2027. Now, the big risk are 2027 timeline is all focused on the growth opportunities, all focused on that 2027 timeline, but any adoption delays could push out the revenue inflection point. Even though they have a partnership or this collaboration with Nvidia, there's no binding commitments or revenue guarantees. And the company, while they do have a nice amount of cash, they are burning about $11 million per quarter. In theory, they should be able to survive just fine, but it is something to keep a closer eye on. Now, other bearish case are there's a lot of other partners and competitors within that Nvidia ecosystem, and the market cyclicality, right? Power solutions and power players tend to be a little bit more commoditized, so there's always a form of cyclicality within that space. Now, management believes this is a multi-decade opportunity and that the trend will reshape power architectures at rack, system, and grid type levels, which is extremely bullish for Navitas. Now, overall summary, this is a high risk, in my opinion, high reward transformation. Navitas is betting the company on that 2027 800 volt AI driven S curve, but any execution risk could be a major threat for this company. Now, for me, like I mentioned, this is still a trading vehicle. The closer we get to 2027, though, my thought process would change. Now, I believe there is an opportunity for 2027, but the volatility will still continue. So if I was a shareholder of Navitas, it would be one that I would have to be very, very patient and definitely not check on a daily basis because I would definitely go crazy. Now, this is one that I believe I would, if I was to buy, it would be more of small dollar cost average over time and not one big opportunity unless we get into like maybe the sevens or $8 price point. But that's a whole different story for a whole different day. Now, before I end the episode, I know some people are curious about my thoughts on Coreweave and Nebius. The stocks are down a nice amount today. I want to say these are the stocks I'm personally more bullish on. Obviously, people are doing good with your Iron, your Cypher, and all those other players. Those are great in forms of stock returns. But I think in the long term, CoreWeave and Nebius, in my opinion, fit my risk to reward tolerance a lot better. Right now, I'm not buying shares, but I am willing to sell puts on these, where these puts, if give me great premium during these downturns. And if they get exercised, they will give me the prices at a lower price point than I can buy right now. Or if they don't get exercised, then I collect the premium. So that's what I'm doing with these two right now. I'm still very much bullish. And still, if I do buy or trade, it would be more in a bullish manner. So I hope you guys enjoyed today's episode.